Hey everybody, how we doing? Hope everybody's doing well. It's the Sherpa here. It's Sunday. It's the Sunday Sherpa, the Sunday edition of the recap for last week and going into this week. What stocks to buy, what stocks to pass on, what I'm thinking, and just how to handle a lot of this stuff that's going on. Two major things happening this week that we're about to talk about. Most importantly, thank you all for being here. We're about to get learned up on the market. I'm going to go over some new pieces of the presentation, some old pieces of the presentation, threw out a couple things, time to learn you up on a little bit more. Here in the background, I have Ever Bullish. It doesn't look like it's appearing very well, so go to everbullish.com if you want to follow along with me. But here's the presentation, and here's how we're going to do it. We're going to keep doing it. We're going to keep crushing the market. Free to follow, like, subscribe. Let me earn your business. Buy one of my portfolios. Most importantly, trade these stocks, beat the market, don't deal with the BS that's out there in terms of being forced to purchase products from high fee and commission-based idiots. You ready? Coming out firing, baby, the Sherpa. I got a whole lot of love. Gonna give you all a second to jump in there. I got a whole lot of love for the market this week, guys. Going a little contrarian, going a little against the grain as far as I see it. I think that there's a lot of fear. We've got the inflation worries. We got Jackson Hole coming up later in the month for the Fed meeting. We go to everbullish.com. We figure out what's going to go on. So click on the right side there for me. And hopefully this looks a little bit better than last time. Let's see if I can make myself smaller. And I can. Good. Okay. Follow along if you want to. Get a pen, grab a pad, get your climbing gear ready. We're about to climb to the top of the mountain, and the Sherpa's taking you. So what's up? What's going on? The title for this week is the week ahead, the Sunday recap, do or die for UWMC, United Wholesale Mortgage. I've been touting it. It's been losing money. It's been a square trade. It's been a dumb trade. There's a lot of money on the sidelines right now in the mortgage space. However, I believe that this is a highly profitable company and the perfect space for an interest rate. For rates to go up, it's still going to float if rates go down or stay the same. I've told y'all before, I believe in the soft landing. We're going to talk more about that in a minute. Most importantly, what's happening in the news right now? What's everybody talking about, huh? It was interest rates last week. Week before that, it was crypto. Week before that, my God, what were we talking about? Energy was at oil was at 75 a barrel. Energy was going through the roof. Week before that, it was all about NVIDIA and its reverse split. Week before that, where are we? Mid-July. We were still bullish on tech, and we were still kind of scared of the banks. Meanwhile, the call on the banks worked out. So stick with me here. The infrastructure, what is it? I put it here for you. Everything you need to know. I'm not going to read it verbatim. The guys at the New York Times were nice enough to write this, so I don't have to. Straight up, what's happening is that there's some bipartisan legislation, $1 trillion. What's another trillion to throw into the pot right now, right? We're printing money at the Fed in the tune of $6 trillion a year. We look at last year and the year before. Now let's let the fiscal side of things versus the monetary side of things tell us what's going or what's going along and what's going to happen. So all we're going to do is read the tea leaves here, guys. My favorite philosophy is let it be an easy trade. We don't have to make things hard. They're telling us what's happening. Monetary, right? Monetary policy is the Fed buying and selling assets, controlling the money supply, trying to keep inflation at bay while making the markets, possible and equitable to grow, especially for the last 15 or 20 years. On the other side, the fiscal side, we can always raise taxes, right? We can watch what the government's doing from a tax perspective. We can look for tax breaks. We can also look for reinvestment. That's what this is. Economics 101, this is reinvestment in the infrastructure of America. The main thing is to modernize the power grid, which I'm all about down here in Texas. It was the coldest summer. You didn't ever think you'd hear about people dying due to freezing in February in Texas, but that happened due to the kind of the antiquated power grid. Hundreds of billions of dollars going to repairing and replacing aging public works. $550 billion of new federal spending for spread across internet access, $110 billion rather for roads and bridges and projects, $20 billion for airports. Good luck fixing that problem. And the most funding ever since the founding of Amtrak to get trains back on. Anybody who's been to Europe always comes back and wonders how come trains don't work. And there's a lot of reasons I could answer for you. Most of it is the low cost and the barrier to entry of building trains. The high cost of barrier entry and the low cost of ride. So it's an expensive product and it doesn't yield a lot of income, right? But we're going to see if we can fix that. I think that revamping the trains is a good thing too. There's probably going to be some square trades involved here, right? There's going to be the guy that says, oh, buy materials, oh, buy Caterpillar, oh, buy textiles, oh, buy oil. You don't think the market's already seeing that? You don't think that's already been priced in for the last 2 years? I'm not saying it's not a good trade, and I will happily add a little bit of XLI, which is the industrial sector of the S&P 500. I'm probably just going to cherry pick stocks out of that, but I'm not doing it yet. And I believe, again, trying to get ahead of the market, seeing where the money's going, looking at the heat maps. I believe what this is we've already heard from the Fed, like I said before, on the monetary side, easy money, pretend like it's not happening. If you don't cry, it doesn't hurt situation with interest rates. And now we have the fiscal side of things going, look, we're just going to spend our way out of this. This is the ex-wife. She just got the check and she's going to the Prada store to spend the money there at the Woodlands Mall for all my Houston boys. So anyway, purely bullish this week for the reason, mostly sentiment. There will be material space. There will be industrial space. There will be a power grid issue. That will be very easily solved by hundreds of companies that are already ready to go. We'll talk more about that with QS later, but purely bullish based on sentiment. Let's let this be easy. Remember, we got to take away from CPI coming out last week. They're really straight up. Let's go fast mode. Minor reactions to CPI. We got the conversation going, but we're still spinning like nobody's business. There it is. So I added a brand new section. I just shouted out my Woodlands boys there in North Houston. Now I'm going to shout out some of my League City boys that contacted me and said, listen, dude, we love your trades. We like what you're doing. We need some more transparency. I want to see what you own and when you own it. There's a problem with that, and it's called discretion. These are all non-discretionary newsletter trades, right? You're allowed to follow, but if I give you time and price, I can get in trouble. So I don't give you time and price specifically. You can follow my Instagram, however, to see what I'm buying with my trade tickets, but this is one of my actual accounts. This is my options trading account. These are the positions I own. I didn't leave out the percentage down on these. I'm down on every single one of these positions except for the SoFi trade. And I'm going to talk more about these positions as we go through this, but these are the positions I'm bullish on. Have a little bit of worry about LabU. We'll talk about that. I think ERX, both of these positions are easy, straight up free money to anybody out there. The SoFi trade's a bit of a gamble, but I'm a bit of a gambler. So let's keep it moving. This is a new section. This will always be here so you guys can follow along. And if you're not comfortable trading options, do not do this. If you're not a sophisticated investor, do not do this. The main point of Ever Bullish, however, I will say, is not to try to protect you in the form of selling you an antiquated product or selling you anything really, but to help you learn on your own. So if you want to go in the batting cage and try to take a swing, get after it. Yeah, moving on, I'll digress. I still like gambling stocks, particularly sports betting stocks. This week, last week, and the week before, we saw KNG, DKNG, DraftKings, Penn, and the Score. The Score was that huge winner I talked about a couple of weeks back. The Score still has room to run. It's Canada. It's gambling. It is the PGA Tour. We've talked all there. I still like DraftKings the most, still in the same order. Long-term holds for all of them if you want to. Dip trades for all of them if you want to. I'd stay away from the options on this. There seems to be a lot of consolidation going on. For example, was it the Golden Nugget Sportsbook? Yeah, I believe it was. The Golden Nugget recently sold to DraftKings for a whopping several $1 billion. So there's more of that to come. Consolidation in that space makes me want to stick with the big dogs. Okay, let's keep it moving. Where are we? What do we do on Sundays? We look back at the market map by volume. Remember, market maps by price can be very, 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 very misleading. Market maps, heat maps, that is, by volume are typically where the money is. So let's look. We saw, and this is the end of the day. We don't want to give the end of the week on Friday. We don't want to give too much credo or too much thought and concern to what happens on Fridays. Remember, nothing good happens on Fridays from a trading perspective. Shout out LabU selling off 4% in the last 30 minutes of the day. That means nothing. That means less than nothing. But here's the market map at the end of the week last week. AMD, NVIDIA, MU, that's Micron. A lot of other positions, Intel, Apple, Tesla. We're seeing mostly flats. And then look over here. The week before, if you want to go back and click on that article, You can check that out, and you'll see that banks were where it was at. We're going to see a little bit more about that here in a second. But look at how little, just exposure in general. Household goods, not very big. So when it comes to these guys, the size is the volume. I think you get that. So the smaller these positions are, even though they're mega cap and large cap companies, the smaller it is. That means that's the less amount of money flowing in or out. I think I failed to explain that thoroughly to some of you newer investors out there. So when you look at the size, you know the volume. And when it's very small over here, particularly in the healthcare aspect, consumer defensive aspect, you can see that the banks, especially the regional banks, were a little bit smaller. That ain't going to last. That was a wishy-washy day, a wishy-washy week. So what I'm seeing here is I'm seeing market bouncing into tech, falling in energy and healthcare. Banks stagnated, but up significantly for the month, right? Let's get to the trades. Let's get to screw the macros, screw the data, screw the analytics, forget all of it. What is up? Made a video a couple days ago. I'm sure you all watched it on SoFi. Probably one of my most convicted stocks right now. This is a gamble, guys. A big gamble, but a triple buy on SoFi. Sold off hard on Friday for no real reason other than obviously missing earnings. A lot of data that wasn't included on that. I gave you my reasons why. You can go back and watch that video. But SoFi all in for me when it comes to a long-term hold, when it comes to dips or swings. If you're not in it right now, I wouldn't even say to buy it yet. See what happens on Monday. If it's down on Monday, I want to see somebody. What I'm going to do is I'm going to throw a little bit more into this option that I have up here listed out conveniently for you that's already in my account. I'll buy it in another account so I can maintain my bases a lot easier and not have to deal with wash sales or anything like that. Not that it really matters for a profitable trader. You don't really care. But there's no reason for me to confuse the two, particularly when we're just dipping our foot into SoFi for the first time in a very, very long time in that space in general. And it's a SPAC. Remember, SPACs get hammered for no reason. They also make a ton of money for no reason. And that reason is that the investment industry and the fat cats at Goldman, Morgan, RBC, and the big investment banks are really trying to basically shade the SPAC industry because they don't play by their rules. I don't play by the rules. Another reason I like SoFi, they don't play by the rules. I think we've talked enough about that. Most importantly, guys, another thing here, we're rocking out the earnings week ahead. This is a boring earnings week for me because there's no real high velocity stocks on here. But what do we see? We see UWM, United Wholesale Mortgage, before the open. I'm listening to the call for you guys. I'm going to put out a video tomorrow about that and tell you whether it's something I'm going to throw in the trash forever or if it's something that I'm going to keep. But I am going to buy some regardless tomorrow. So it's going to report before the open. I plan on my typical tried and true 10:40 a.m. buys on UWM. I think it will be up on the week. I might buy the warrants. I can totally think that buying warrants on a SPAC that came to market at $10, anytime it's below $10, it seems to be a lot of juice for the squeeze in the warrants versus the actual stock. They move faster, and if you're a trader, you want fast-moving stocks. So there it is, UWM, UWMC. PaySafe is also reporting this is a stock that I love. I'll talk more about that in another video. Otherwise, we've got Lowe's, we've got Walmart, we've got Home Depot, we've got Carmart. There's another one I put on here too, right? Oh, yeah, Target. Target is probably going to make some money. A lot of the babes getting out of the house, a lot of the housewives getting out of the house, the back-to-school rounds, that is the just the kind of the homemaker that's getting out post-COVID, now back to COVID, but still opening up. I just like all of these. I just don't care about them. So I'm just going to, I don't pay much attention to certain sectors of the market unless I see, higher than returns than what I'm typically trading for or reaching for. But I'm not getting out change, but we'll just listen to that. We'll let that be. Retail, I only like two stocks, Lululemon and Yeti. Told y'all that. All right, follow the Fed. Remember, this is just another reminder to follow the Fed. We're not going to start, losing our heads or shitting our pants just because the news tells us to. We're not going to worry about inflation just because we're told that there's inflation. Even if we see it, it's all being digested by the market. It's just, like I said earlier, it's don't cry because it hurts. Pretend it's not happening. Here we are with the sectors. Taking a break for some breath. Yeah, here are the sectors, the performance of the sectors on the month and then the week. So looking on the month, what's been best? Utilities, don't like them. Financials, love them. Told you to be in them. If you own FAS, you're welcome. Like Goldman, as you know, SoFi is a financial. PBTC that I talked about, People's Credit Trust, I believe is what it's called. Regional bank, been crushing it. 5% dividend, up over 45% on the year. Why not? Materials, don't watch it. Consumer staples, don't watch it. Healthcare is a space that I watch. The Ever Bullish One portfolio, my professional portfolio, has some exposure to United Health in there, or at least the healthcare sector. It also has XBI, which is a subsector, my favorite sector, the most underrated sector in the market. You heard it from the Sherpa. It's just the damn truth. That is what it is. XBI, the biotech sector of the S&P 500, is the most undervalued sector for future growth with hitting all-time highs. And I still believe that, and I'm still bullish on that. IT next. So we got tech and communications and healthcare is kind of trading together. What normally goes with tech? Discretionary, right? Discretionary was at the bottom over the last month, all except for energy. Energy was the worst performer last month. And your boy, the Sherpa, still bullish on that. I'll tell you why in a sec. Last month, energy, we were down 6 in energy. Now we are down just below 7%. I see that coming back. It's going to be a mean reversion. Energy companies are smart. They hedge when oil prices are high. They buy more when oil prices are low. No fear whatsoever on that ERX trade. And again, if you go back to my options and you want to follow my thinking, if you want to hear what to buy, but not only what to buy, not only tell you what's happening, but telling you what's going to happen, where to buy it and why, that's why you come to this channel. You have ERX at 26 and 27 calls there. They're both in October. We have 2.5 months for oil prices to stay the same or go up, and we make money in those. I'll probably be buying more if we see down again. All right, I think that's enough on the sector piece. Something to note here, guys. This is why stock selection is important. This is why indexing sucks. This is why Vanguard should be disallowed for anybody that wants to ever. Okay, let me take that back. Anybody who wants to ever talk about being an investor ever as if it was their skill, their knowledge, or their efforts that produced the results, if they have Vanguard, you could just shut them right out. There's no fun in copping out and just taking the average score. I mean, that's like auto-drafting your fantasy team and then telling everybody how great you are, right? You can tell I'm happy about football. I digress. Let's get on it. Sherpa, baby. Where I was going with that is look at the stock selection importance here. You could have bought utilities the last month and been up 5%. You could have bought energy and been down 6%. You could have bought communication services and been flat. Over the last month, 1, 2, 3, 4, 5, 6, 7 sectors performed better than the market, while only 4 did not. Why not throw some darts, buy what you want, buy what you believe in, buy what's not, buy what's down and rotate for the reversion, right? You guys get it. I'm going to move on. Here it is. We're going straight to it. I'm taking a couple things out of this as well. I took out the CPE diagram. I'm going to talk a little bit more about MACD and trading. I am making a bullish move and Sherpa best bet on a rare Monday buy. When do I like to buy? Tuesday mornings, turnaround Tuesday, institutional Tuesday, tidal wave Tuesday. I like to trade on Tuesdays at 10:40 Eastern time, 9:40 Central here where I am. But here's what I say, regardless of what happens on the call, regardless of what earnings are reported on UWMC, I'm going to take half of the position that I plan on being fully invested in UWMC, whether it's an option or whether it's a common share. It's probably going to be a warrant for me because I like the high speed of the warrants. UWMC WT, remember, UWMC WT, I'll say it again, is the warrants. They move about 3 times the price of UWMC in up markets. They move 3 times down in down markets. So I feel like we're bouncing off a bottom there. Regardless of what happens, I'm going to put half of that into the warrants most likely. If it drops the next day, so on Tuesday, I'm throwing an option at it. I'm going to hold it for maximum 2 weeks. I'm looking for 30% return on that. So that's it. The Sherpa best buy is going to be in United Wholesale Mortgage. If this company sucks, turns its back, and I don't make money on this trade, I'll never trade it again. It just doesn't make sense to me that Rocket Mortgage that Ally Bank and that a lot of these other mortgage companies, Wells Fargo, all of these mortgage originators and owners, lien holders, the whole bit would be losing money to the tune that is implied in the price movement of UWMC when we're hitting all-time prices in real estate. And though we are losing money or losing interest rates, the price and interest rates, the Fed is still giving money away for free to these guys. I believe that they're greedy, but I don't think they could possibly be that greedy. I do reserve the right to be wrong, but I'm not in this one. UWMC is going to pop. I don't even really care what the call says. I want to listen to the call more for the overall market information, the demand that's going on there, what they talk about as far as barriers to entry to competitors, really to see where their edge is. And then here it is. I told you all about the CPE chart that I had up here for a month and a half, talking about how to best use RSI to figure out your trades. Now I've got MACD. So MACD stands for what? All right, let's start here. I believe you all know this, but I've got a regular chart up here. It's a 3-month chart. I've got MACD set at 26 periods and 12 periods. And what we see is that the longer time frame in up markets is the one that's on the bottom. So that's the green, right? When the shorter time frame, which is the red, so we got 50 we have 50 periods and we have 30 periods, right? So the purple is going to be the shorter time frame. That's a more compressed amount of data. That means the more recent and more indicative price moves of what's happened most recently in the chart. When we add more data to that sine wave, if you will, that data becomes more watered down and we get more like an average. What these really are is this is simple moving averages. I like to use exponential moving averages, but it's not going to matter in a 3-month chart like this. The point here is that typically these are lagging indicators. So after the stock price has moved up, you notice that there's a crossover. And this crossover here, I'm circling here with my mouse. Hopefully y'all can see that on the screen. The crossover of the purple, meaning the shorter moving average, when it crosses over the longer moving average, the more data, that means it's indicative to see a higher pattern of up trading. That's exactly what happens. When they converge, that means that they are coming together. When they diverge down here, that means they're moving apart. And you'll see in the histogram below, that stands for the blue lines on the histogram. So if the data of the short one is going is breaking away from the data of the long one, that means that we're either going to be reaching new highs or lows. And if it's on top, that means more highs. And if it's on bottom, it means more lows. That's MACD. I'm going to keep going into detail. I can't blow my load on the first song. I can't come out here playing Zeppelin for you guys. I got a whole lot of love. If I played Stairway, I would have just, you can't top that. So I can't give it to you all, but I'm giving most of it to you. You'll see here right in the middle of the screen when we have the 1, 2, 3, 4, 5, 6, 7, 8, 9, 7, 8 down days in a row, that they are at the max point of their convergence. They're converging to the most, and it's when they flip back and they start diverging. Again, MACD, moving average, convergence, and divergence. This is the histogram. That's how I prefer to look at it. And then you have the signals here, which is when the crossovers are. So these crossover signals basically are supposed to show you what is going to happen. And what I'm seeing here is I'm seeing a significant amount of max divergence, and they're going to start converging again. That's what I think. That's what the recent price move on Friday tells me. That's how I'm going to trade it. Oh, and by the way, RSI on the 3-month is still at 50 or close to being below 50. It was below 50 yesterday, before Friday. That's what the chart is. Hopefully that helps you. I'm going to make more of these videos. I'm still trying to intertwine it all just because I love this shit. And I hope you love it too. Give it a like, give it a subscribe, give it a share, tell a friend, tell a stranger, tell a neighbor. Get on board, get on my back. Let me carry you to the top of the mountain. Oil. Speaking of the Houston boys, crude oil moved up. It moved up tiny. Last Sunday when I made this, it was at 67. It's up at 68 right now. Over the weekend, we're going to have to wait until it pops. It should list very soon. But I wanted to get this out to you today. And here's the philosophy. These infrastructure dollars should continue to bolster the energy sector for several years to come. And they will swing. Prices are going to swing. But this proves a long-term rotation from oil to gas, wind, and solar, which is being sponsored by the federal government. And the fire and the flame, so to speak, here to keep it in the theme is growing. It's going to take oil. It's going to take energy. It's going to take natural gas. It's going to take pipelines. It's going to take utility. It's going to take electricity. It's going to take all of these things to continue to rebuild and make ourselves greener. I believe that this is just the positive feedback loop, the wave, the snowball, whatever you want to call it, just setting up to be even more bullish as we have a softer transition than most people in square money and dumb investors have expected. This is another reason that I like a lot of these power grid and battery companies too, is look, it's not like the petroleum products are going to bed overnight. It's also not like they're not going to be a part of our life forever. And ironically enough, remember, ERX still bullish, as bullish as I've ever been, still bullish. It's at 22, 23 right now. I believe it hits 30 in the next couple months. My options will tell you that. My money's where my mouth is. Get on board or get passed by. And if I'm wrong, then please buy it on a down day. Please learn from my pain. But I don't think so. I think we're all going to make a lot of money on this trade. LabU, my baby, my engine of my portfolio. I believe in biotech. I said it before. I believe it's the most undervalued subsector today. I maintain staunchly a bullish stance. It's the engine of my swing trading portfolio. Y'all know that. Edit and Avenger are both good long-term holds. Edit, since I mentioned it, has gone from 60 down to 40, back to 65. So if you dip trade, you can get that one. Avenger, like I said, it's at $1. It'll be at $1.20. It'll probably be at $3 sooner than it's at 50 cents. That's how I feel. But LabU, anytime this goes below 60, what is the rule of the Sherpa's thumb? The Sherpa's thumb, the Sherpa simple trade is to let it be easy. Buy LabU, sell it when it gets above 60, 65, 70. I still think it hits 80 at some point throughout this year. We're only halfway through. We've learned how to trade this thing. We've got it dialed. If it doesn't go above 60 this week, I'll probably sell those options, try to buy even lower. I own a lot of this. It's just individual shares. So, and the dip trade still works on it. The swing trade still works on it. But I'll bet you we see a 10% up move at some point throughout this week. Those options will pick up 35%. We'll get back out. We'll buy some more. I don't see it likely that it goes below 55 or stays below 55. If it does, fair play. It's still good. I still got a month left on those options I talked about. And for the long-term hold, even though this is a triple leverage, guys, there's not enough time value erosion to be scared of this thing. When XBI is trading as low as it is, meaning the biotech sector is trading as low as it is, it's an all-in. No reason not to. All right, what else? We got SOXL, SOXL. Buddy of mine calls it SOXL. This is the 3-time semiconductor. I told you that the Fed's just willy-nilly going, hey, no reason to worry about rates. We're going to kick the can down the road. And then now we have, the Senate passing a $1 trillion bill and another $3 trillion bill that's still on the table. Talking in trillions like it's poker chips is incredible. That just tells me it's bullish. And I could go in the industrials and I could do all the square trades, but I'm actually telling you, I think QS is huge. QuantumScape. Infrastructure, power grid, electric cars, mobilization of battery storage technology, every single thing they do from the top down to the bottom. There has been some big time insiders selling on it. That's what happens when you start as a SPAC, guys. That's just what it is. I don't let that scare me at all. I think QS is back in the 30s in no time. I wouldn't even hate to see an option on it. Or really, things are going to be so good over the next couple of weeks. Yeah. Take your pick. Pick anything you like in the queue. Send me a text. Hit me on Instagram. Send me a DM. Leave a message in the comment. Ask me what you think, what I think. And I pride myself on getting back to you. All my bulls out there, you know who you are. I don't let a text message go unread, and I respond to all my comments immediately. Also, still love Square. I also still love NVIDIA. And then SOXL is on there again. I just got to tell you how much I love it. How we doing on this stream? How's it looking? All right, cool. It looks like to be working. Bitcoin, guys, this is kind of cool. This is, again, bragging for the haters in the comments that don't like the bragging. I'm showing you how valuable this is to you, and I'm screaming it from the mountain. That's why they call me the Sherpa. You're going to hit yourself over the head and hate yourself if you don't follow what I'm simply, easily, and freely giving you. So get on board and tell your friends is all I ask. If you feel so inclined, buy your boy a cup of coffee. But what we're talking about right now, Bitcoin, 2 weeks ago, Bitcoin was at $34,000. Last week, $43,000. Same time I wrote this. All I do is change these numbers or add a space to them. Bitcoin today, just this morning, as of 5:30 p.m. when I was writing this, Bitcoin was at 47,163. No birdie who told you that was going to happen. Even more so, Ethereum. If you don't want to listen to anything I say, you don't want to follow any of my trades, if you just want to make money over the next 3 months with very little risk and very high return that will beat the S&P 500, the NASI, the Dow, and any other index that you feel freely choose to use, Vanguard, any of those indexes that you freely choose to use, just buy Ethereum. Buy the Grayscale Bitcoin Trust, Ethereum Trust. It's ETHE. If you want to buy Bitcoin, it's GBTC. Ethereum from 2 weeks ago, Ethereum was at 2151. That was 3 weeks ago, 2151. I told you originally about it at 1900, 2151. Last week, was jumping out of my shoes, telling you how great I was on here, right? 2933. Okay, so that's so from 2 to 3,000 is what? Is that 33%, right? I think. All right. Well, now repost for the third week. So I'm reposting. I know y'all don't find any fun in this, but I sure do. It's at 3294, guys. So we took it from 1900 to 3294. I believe it hits God knows what now. Told you Bitcoin is going to hit 60,000 before the end of the year. Making another call. Let's be real. I'm playing with house money, how right I've been on this and how much my own personal assets have gone up on this. By the way, we rotated the Ever Bullish All Stock, the Ever Bullish One Premium portfolio into this before this pop happened. That's how I'm crushing the market by double digits halfway through the year for 75, now $100, because that performance is worth it. If you're not on board, go to my website, buy the Ever Bullish All Stock portfolio, and follow along with me and trade with the Sherpa and beat the market, right? Okay, that's the crypto thing. Just if you don't, I can't believe these brokerage firms aren't letting you buy it. And doesn't that upset you? The same company that I used to work for, the same companies that all these other, BMW driving D-bags work for, that are fantastic salesmen and really shitty asset managers, and in my opinion, mostly morally corrupt. They're not doing this because they simply don't care that much. It is that easy. Let it be an easy trade. All right, strictly gut. When nothing else is happening, I'll throw some cash into FTCV and DRIO. DRIO, I've talked about this. This is strictly gut. You don't have to ride with me on this one, but I think it sees 22 again. And for right now at $14, why not? It's great. And the chart's kind of pretty too. It got cut off here. So here we are. If you'd like to help Ever Bullish with this new approach, this different approach, you don't pay anything. You tip me in the form of a cup of coffee, buying one of my portfolios, but that's really a service to you. And for $100, there's nothing better out there. I need to update this. It says it's up over 8%. I'll get the results back with the Ethereum in there. I bet you it's up over 15% over the S&P 500. Only 3 trades this year. No fees inside, no fees outside. You buy a list of stocks that I personally trade, I personally own, and I try to beat the market every single year. And I take absolute offense to anybody who says stock selection is not advantageous and that it's hard to beat the market. I've proved it on YouTube for over 100 videos now, and 1,000 other people have found out. So to toot my own horn, the Fidelity 5-fund growth portfolio money back guarantee, go buy it. Ever Bullish One, changing its name to the Ever Bullish All Stock. Those are the same thing. It's an all stock portfolio of 20 to 25 stocks, how much you should own at any given time. It gets rebalanced in the form of trades throughout the year. I tell you when. I send you an email, you buy that one. That's also killing the market. The Ever Bullish Dividend has had 0 trades. It's got a 7.5% yield, and it's beating the S&P Growth Index, the growth index of the S&P. So it's like you own growth stocks, but you get 7.72% dividend yield, still beating the pants off the market by 2%. Ever Bullish Balance, the easiest way to make money out there, the most popular allocation for people in their 50s, 60s, 70s, and 80s. If you go to a broker and you're in your 50s, 60s, 70s, and 80s, they're not going to let you have any fun. They're going to tell you you're going to run out of money, which is not true. But unless you buy a balanced portfolio, they're going to wrap a 1% fee on it. Right now, they're up about 6% on the year. Mine's up over 9.5% on the year. Simple. I told you how I was going to do it. I had convertible securities. I had a couple of better than most dividend and sector-based stocks that I think are going to do well throughout the year. 0 trades in that. On $1 million, the average fee at 1% would be $10,000. I don't charge you that $10,000. I charge you $100 for the portfolio, and it's beating the market. So subtract your 10 grand. I'm beating the market by 4%. That's 40,000 on $1 million. $40,000 minus 100, $39,900 just for following this. Come on. This is why I quit. This is why I gave everything I had, pretty much my future employment for this company. So You're welcome. Here are the results. Results are the only thing that matters. I'm getting a little long. Let's get back to it. Let's show a little bit of love for the market. Let's throw some Zeppelin back on if we can. And for sticking all the way to the end, hearing me ramble, self-promote, and just speak the good word to you. This is the best option trade, guys. It's SoFi. This is a SoFi October 15th, an ATM. If you don't know, that means at the money. So that means when the premium plus the strike price is roughly what it's trading for now. I own the 15s. I think the 12.5s, if it's down, if SoFi is down on Monday, by the 12.5s. If SoFi's up, by the $15. Does that make sense? There's another tip for you. That'll make you over $1,000 in the rest of your trading career. So I'm going to stop sharing. I'm going to bring myself into focus if this works. Jesus, your boy's looking haggard after however many minutes I've been going here. I love all y'all. Thank you all for following along. Go to Everbullish, sign up for the newsletter. Share this with your office. If you have a Fidelity 401k account that has brokerage links or over 100 selections, you can participate in the Fidelity 5 Fund Everbullish version of the growth portfolio with money back guarantee on my website. Otherwise, you have no excuse. If you just want to keep getting, random, appropriate returns for your level of risk and just making the fat cats rich, they don't care about you. You're paying for the idiot at the coffee table. You're paying for your boss's boss's boss to go buy another boat. There is no integrity in the industry anymore, and that's what I'm here for, is to show you this. Send me a text. Personal cell phone number is easily available. If you leave a comment below, please like and subscribe, and just share the Everbullish message. It's to help you all out. So I appreciate every one of you. We played a little bit of Zeppelin today. I got a whole lot of love for the market, and I can't wait for you all to make money and to come back with that earnings report tomorrow for UWMC. Stay bullish, my friends. The Sherpa is going to take you to the top of the mountain. Chase Everbullish, the YouTube portfolio manager, everbullish.com. And let's go have a good week. Happy Sunday, Bulls. AFG, LFG, LGR. Let's get rich.